Welcome to Trading Lounge and the Commodities Report. Starting on the 10-year yields here. This is a weekly chart and we can look at it in two ways. First of all, we can look at this moving up from wave 4 here up to wave 5. That's one way to look at it. It's also possible for this to play out a little bit further in that we'll have a move down here first and then a move up here, then a move up here, and then a correction at that point, and this wave 4 would come over to here. And the reason for that is that this is the 10-year yields, and you can see that the 10-year yields has made a new low here. So if I go to the 30-year yields here, that's this one here. So we can see that it's got this straight line down through to here. Now, yes, this could climb straight up from here as an A and a B and a C tucked in here. But then I'd have to go sort of 1 and 2 and 1 and 2 here, which is sort of okay-ish, you know, and we'll have a third wave continuing to build up here. But it's also quite likely that it could come down here first and then build up because it hasn't done a really nice A, B, C pattern here first. So I'm not sure the importance of the 30 years over the shorter curve there on all of that. Some of the others around the world, the Australian one that we look at on the 10-year yields here is sort of tipping the top here. Now, the other sort of point, we can just have a quick look at that here. We can see it's the same pattern here, but you can see that this move up here has taken the top out here. So coming back to the 10-year yields here for a moment and then sort of assuming that that we could just move up here into the fifth wave, then I'll go from the weekly chart to the one-day chart. It gets a little bit messy, but hold your horses. So this would be wave 3 over here and wave 4 here, and putting wave B over here, so an ABC for this. So that's not really fitting into the 30 yields, and I don't really know the importance of that actually, but otherwise going from wave 4 here up to wave 5 up through to here in the most conservative count would be wave 1 here and 2 here. And then looking at wave 3 here with 5 waves, 1, 2, 3, 4, and 5. A bit odd this wave 4, but it's a good fit, and we did it right, right from the get-go. So we've got 5 waves up here, but we've also got 5 waves down here. So this 5 waves down here would be the little A wave, a B wave, and a C wave for wave 4. This wave 4 here. And then pushing up at that point, so a little ABC pattern. And if we take a look at that, say on a say 15-minute chart here, any sort of intraday will do the job. So from the top of wave 3 up here, we can see it's a bit tricky which top to use here, but all in all, I can see a strong third wave here, so I'm not that sort of fussed about it. So as a wave 1 and 2 here, and then there's actually 5 waves in here, I won't bore you to death, and then 4 and 5. So because we've got 5 waves here, we called the low in and we're looking for a move up, and this is the box here. This little move can be counted in different ways, so I'm not going to go into that at the moment. We're just going to observe it, and then we could come down for the A, the B, and the C wave over here for wave 4, and then push up at that point. You know, we may just sort of take the low out here or something of that nature. So we'll see. I mean, based on this 5 waves here that we were looking for some sort of A, B, and C. Let's see if we get that. If I've made a mistake, well, then we're just going to cruise straight up into that 5th wave anyway, and going up into that 5th wave here. I mean, we're also like looking for the US dollar to become weaker at 101 on the DXY. So I need to confirm the turn, but we'll look at that next. So perhaps this will come down with the dollar at this point, you know. We'll see. So moving over to the US dollar here, I won't go to the bigger picture, but from this top here, we've got wave 1 and 2. Now, I could, from blue wave 2 here, I could go down to blue wave 3, or I could go down to next wave 1 here as wave 1 and 2, which would suit the euro dollar. In the inverse of this for the euro dollar would make a nice 1-2 at that point. And also too, I put this red line in here yesterday, as you may know. So if that's breached, then it's difficult for this to be 3-4 at this point. it would be better off as wave 2, as green wave 1 and 2. So basically it has moved, as a wave 4 we would sort of expect it to come to 40%, 38.2, and then also they can come to 50%. It's not the end of the world as long as they don't really overlap here, because if they do that then we'll call it wave 2 at that point. So all in all, we can count it up from the low here, either as wave 3 or wave 1. That's an argument within itself, and we can look it up as an A and a B, and yesterday we were counting it up here as 1 and 2, then 1, 2, 3, 4, 5 for the third, ABC for the fourth, and then looking for it to move up here, and it's kind of like really struggling to move up, and rightly so too, because this is a CFD product, so it's in 10,000 and decimal pointed thing. So this is the 100 and this is 101 here. So in my small little brain is that 1 is the strongest number in the market, and so this is partly while this is struggling here. It's the first sort of, not to say that's going to fail at that point, I'm expecting it to, but yeah, so I mean we could just use this as a line in the sand of support and resistance, and if it doesn't become support after a while and becomes the resistance and drifts lower, well then that's the line in the sand, So it's a bit difficult from here to go up here in 5 waves. I mean, wave 1 is too easy, wave 2's easy. I can actually count 5 waves up in this wave 3, 4, but I've got overlap here, and so look, it's just basically a little bit messy up here. But I think one of the takeaways here, and I haven't really looked into it, but I can see that there's actually a little 5-wave move here. So this may be the beginnings of a move down. I would be a little bit convinced once we move past 3 waves. Let's just assume for a moment that's 5 waves down. We could get an A, B, C, an A and a B and a C, because in 3 waves we could move up from that point. But if we get 5 waves down, then I will call it a top in place. Well, we can confirm it at that point, So we'll just see. And this is really important too, because this will tell us a little bit more about gold and silver as well. Now the other point here too, this is just going a bit left field here, but it does need to be talked about because it's something that I'm seeing with GDX. So this, if we call this wave 2 over here, for example, right, this green wave 2, then I would look at all of this here as an A wave, a B wave, and a C wave here, and then go down. So it's possible this is before it comes out of left field. I'm mentioning it because the inverse of this is something that GDX could be looking at. So in this case, this would be 5 waves down for an A and a B and a C wave here, and then a shorter C wave up here and then down. So that's possible. So I just want to prepare yourself for. We'll have to look at the the euro dollar and the loonie and the dollar yen and that, but I'm not going to look at the dollar yen and the CAD because Malak is doing such a great job with the Forex. So he puts out a daily chart and a 4-hour chart each day on 12 different pairs, and he's certainly got a good eye for Elliott. So we're lucky to have him cover all those charts. But in the meantime, we'll just look at the. I like to look at the euro now and again because it helps me with the dollar, and in this case, yeah, it's probably about down as far as it needs to go at this point in terms of it's in the 50-60% retracement level. So we'll see if we get a turn in this little area here for this to move up. We're seeing the Aussie making a bit of a move to the upside. So this is the Australian dollar here. I won't go to the bigger picture. We've got wave 2 here, and then wave 1 and 2, and then 1 and ABC for 2 here. You could look at this as wave 4 as well here, by the way. But it doesn't really matter. So we are trading long on this, but we're using ETF on the New York desk as the FXA, and we did remove one position. We had another position up here somewhere. So when the market came down to that, we removed that position just to get that to break even. I have brought the stop up from wherever it was down to here because we don't want that breached at this point. And to replace this long trade, we're going to put one back over here, but we want a classic trading levels pattern sitting here. So far, I could look at that as 1 and 2, then 1, 2, 3, 4, 5. So I'm just sort of guessing we'd probably get the first high above the level and then some sort of ABC back. I'll check it tomorrow. Maybe if we can count 5 waves up there, we can buy the pullback. But otherwise, the first high above the level. So we're looking for a pattern like this. So we're here at the moment on this level. We want this and this. We want that first. We just wait for the first high, right? And then we can go long above that. We go along here, and if we can count 5 waves up here, then we can buy back here. But if not, then we have to wait for the first 5 waves to come into here to manage our risk with a part position, and then build onto here, and then continue to add through this section here. That's what we'll be looking to build in through here on all of that. Okay. So that's looking quite good. And this is a commodity dollar, so it rolls quite nicely into that commodity section, because we can see that iron ore is moving higher quite strongly, and yeah, copper will be moving with it as well. So, but anyway, over to gold. So with gold here, this is US spot gold. First of all, the negative point of view of all of this, we could count this as an A and a B and a C wave here, and that's the ABC to that point. I don't think that's the case based on what we can see with the dollar, but I can't rule it out until I can really cement 5 waves in. Currently up here, we've got this as 1 and 2 and 3 here, and then wave 4 here, and looking up for wave 5. So I don't have 5 waves up, but that's what I'm looking for, because if I can get that, then I can confirm that we can go in with a bit of weight into gold stocks. Now, we looked at the 10 biggest gold stocks in the GDX as constituents in the GDX ETF, and we're going to be sort of toying with those and adding counts to them and those sort of things. We won't be looking at those today, however, but we brought them on, and we're going to be looking at those, and hopefully when the new website's done, we'll be able to include some of those in some longer term trades there as well. The other point here too is the message that I'm getting from GDX is not to put wave 1 up here, but to put wave 1 here. And if I put wave 1 here, then I'll be looking for an A and a B and a C wave. So we've called in this temporary low here, and we have seen a lift off that low, so that's good. So I'll just keep a bit of an eye on this. We don't need to do anything yet. No need to do anything in gold stocks or anything at this particular point. We just need to identify this a little bit clearer in this particular space. So I've got some issues. Well, personally, I've probably got a few as well, and some that I don't know about, but I've got issues with this situation at this top area here. So I haven't fully resolved it, but I'm not concerned about it, because, at the end of the day, I don't even have, all we're trying to do at this point is we're trying to get a few positions under this large number. When or if this becomes the support, right, because if is the big word, because we don't have any evidence of a structure in terms of Elliott just yet, not strong enough in my view, but when we get support here and we can really identify an impulse wave to the upside, even in silver would do the trick, then I forgot what I was going to say, but anyway, then we can really build in stronger over here anyway. So we're getting there. We had to wait for all of this to come down, and then we just go, it's all step by step. It's all like a slow motion, isn't it? No wonder people day trade. It gives them better entertainment. This is like watching the paint dry. But anyway, we'll get there. So that's US spot gold. And over here, we've got GDX. So GDX, because we've got the way I see it is we've got a nice 5-wave structure down here. So yeah, since we've called that in, we've got the bounce here. It looks like we've got a little 5-wave structure here. So we'll probably see a little ABC here. I'm not too fussed about this just yet. And then down to here, and then up at that point. That's what I think US spot gold will be doing, and I think that's why we can put wave 1 in up here for this market, and possibly, because even as a wave 4, it's coming pretty close to the top of wave 1. It hasn't overlapped it, and if it did overlap it, I'd kind of, I don't know, a bit iffy about it. I'm probably better off, changing this as well here. I'm probably better off, putting this as wave 1 here, and this is wave 1 here, that type of thing. So 1 and 2 and 1 and 2 here, building it that way, So there's a couple of options here, and I'm aware of them, and I'm looking at them all. And but yeah, so once this B wave comes into play here and pulls back down, then we can start going long above that point, and then we could also look for impulse waves here and start to build in, you know. It's, yeah, I mean, you have to remember this move down through here pulled back quite deeply compared to this one here, you know. So it's quite likely this wants to come down and check into that support area at that point. So if you want to have a little bit of reprieve from, you know, if you've got positions here, we can see this is a bit of an impulse wave. So I'll just chill, but we'll look up here. You know, you could take some money off the table at this point. Let's just, you could refine that better than me at that point. So this would be the little pocket, the 62 to 65 percent in there. The 50% sits right squarely on the 32 there. So if you're thinking of taking money off, then the 32 would be the place to do that. Okay, so I mean, it's possible to put that B wave here at the moment, because I can see this is an A and a B and then 1, 2, 3, 4, 5 here. So it's possible to have that in there already. Yeah, anyway, that's where we are with gold. And like I said, I won't look at the gold stocks today. Silver. So silver's got a much easier count where we've got 1 and 2 and 1 and 2 here, as you know. We're built in all the right sort of areas here. And I suppose, no, I don't know. I think this is okay as 1 and 2 here. I think this is all right in wave 4 here. It does look like we've got 1, 2, 3, 4, 5 down here. I could probably squeeze an AB correction in out of here. Anyway, it's all about this number here, the $25 mark, you know. So what we want to see is more price action over here. So we could get this, and we could get this, and then we could get this here, and then move up from this point. So this is the arrival here. You know, this is where it arrives. This is the first high above the level, and this will be the correction. And this is where we need to build in over here. You know, it's basically this pattern here, you know. So at the moment we're here, you know, just there we are right here. We need to be here or here. So anyway, that's it is what it is. And yeah, so we'll just watch that paint dry and hope it's more than 10 degrees so the paint can actually dry. And or was it 9 degrees? I can't remember. Okay, over to the base metals. So I think the good news about this particular pattern, this is the EMX here. The good news about this thing is that you could go, you know, I'll go into this in a minute. The good news about this is that this move here is in 3 waves. That's corrective. At some time in the future, that top is going to be taken out. You know, it could be much longer than we think and shorter than we think, or whatever. There's 2 ways of counting it so far that I could see. I could go a W and an X and an A and a B and a C wave down here for this Y here. That's one way to look at it. The other way to look at it is, well, an A, B, C, D, and E over here. So, and then move down from here. The bullish count could be an A, B, C here with 1 and 2, and then 1 and 2. You know, so there is a bullish count in here as well, but I can't confirm that yet. And I'll always go to the, not so much the negative, but to the most conservative, slightly to the worst. You know, I want to paint the worst picture first. You know what I mean? And as they say, you know, take care of your money and the trend will take care of the rest, something like that. But yeah, anyway, we still got further to go up here, and this will be a little 1, 2, 3, 4, 5, and yeah, so it still needs to get up here. And we talked about 55 and 56, so we'll go to 56. That's a GAN number. He always likes to trade to 56. He'll buy at 56 and sell at 56, so we'll do that in honor of him at this point. So anyway, short term, these constituents here, and there'll be more of them, of course, are heading higher here, right? So what we want to do now is we want to have a look at, I think iron ore is one of the best markets, you know, for that I can see at the moment, because it's just geared up quite nicely with a big wave 1 coming up here and 2 here and then 1 and 2, and yeah, so it's got higher to go. And we'd been looking at Fortescue was one of them, which is this one here, so that's popped up sort of nicely. It'll probably pop up there again. It's going to open in about 3 minutes. And Rio is another one, Rio, which you could get in London or anywhere else as well. So that's all looking quite good here as well. So we should see these all push up much further. So that's just want to get our little Aussie battlers onto this. Call them when I can see them, because I don't do a lot on the ASX, and we will be doing trades on the ASX. And I did notice quite a good long-term holding stock on the energy sector for the Australians to have a look at, or look at it a little bit more myself, which was this one here. This is VEA, the symbol VEA, and it's Viva Energy. I don't know a lot about it, but it pays a 12% dividend, so it's basically up there with the biggest dividend folks in the world. BHP also is around that, got a yield about that there as well, hasn't it? So anyway, I just thought I'd point that out. Actually the other one too, for which I just noticed, if I don't mind, if I could say it while I'm here, is because it had good earnings this time, so I just checked it out, which was GE here. So this is a monthly chart here. And what I wanted just to point out here for some long-term holders is that back in 68, when it was here somewhere below there, obviously there's more data than that, of course, but this whole trend here, like, it's got to be a, it's got to be a wave 3 or wave 1 or something. So what I can identify here, this is for long-term holders, is that this move here, that's the high. This move here is corrective, because this move up here has taken the top out here. So this is a corrective pattern here. Now, I've got this as an A and a B and a C here, but it's also possible to look at this as wave 1 here with wave 2 here. So all I'm saying with this particular market here is that this top is going to be taken out. This is probably on log, no, it's not on log scale. So, but this has got, nothing goes in a straight line, so forgive me for that, but it would have this accumulation process across here for all of these years to be, we forget about GM because it's been, I don't know if it's, I don't want to go into comment on it, but anyway, I just sort of see it like heading higher, So it's basically $100, so it's got to be sort of, this is log scale, is it? Yeah. So it's got to be further up here somewhere. Anyway, this little trend here needs to pull back anyway. That's just another one. That's so I should just something I noticed. This pattern here reminded me of that in an odd way. But yeah, so if you look for something that's sort of outside of normal things, anyway, that's iron ore. And yeah, so copper. So as I mentioned with copper, this is the United States Copper Index Fund, and we've had this here with a wave B here with 1 and 2 and 3 and 4 and 5. That's what I think. So it will kind of tie into some other markets as well, a bit like crude, I guess. This move here on the LME, which probably trades more volume, I haven't checked that for so many years, but on the LME, I can count this up here as an A and a B and a C wave up here. We could count it as wave 1 and 2, and wave 1 here with wave 2 over here. We could go that way with it. Okay, but we are seeing it push up higher, and if I look at that copper on the COMEX futures here, I've got this as an A and a B and a C up here. But the interesting point here that I pointed out before too is that we can count this down here as 3 waves here, as a little A wave in here, B wave here, and C wave here. So my understanding is that we would, from the box here, basically push up here somewhere, you know. That's what I think. So we've got, so the BHPs of the world are in good space for that, you know. Yeah, so that's that. I won't go into lithium. Lithium is still in a weak spot, but if the US dollar changes, I'll check on that. So I want to go to the energy sector here, and we're going to look at crude and natural gas. And we can see that natural gas is moving up with crude as well. Now, this particular pattern that is here, I was thinking that we've got some sort of, well, ABC pattern, some sort of corrective move to occur here. Now, this is a bit of a guessing game over here, and it could be bullish. And the takeaway here for the energy sector, this particular ETF here, this particular move here is corrective. Okay, so that means that this top here is going to be taken out. And if that top is going to be taken out, the market's going to be sucked up to 100. So we're either going to go up to here somewhere and then come down to this, or we're just going to plow straight through that. I don't know. But because that is corrective, that top will be taken out and we will end up at $100 there. This little move from this low here, we could view this as wave 1 and 2 here, and then wave 1 and 2 here, and then wave 1 and 2 here, and then wave 1 and 2 here. And you can see how quickly that's moving. So that's telling us that we're in the third of the third of the third at that point. So the count itself is technically sort of correct. Yeah, so probably need to have a look at some of the big companies around. Is this all just US here? Looks like it. No English Shell in there, or BP or anything. Okay, all right. Well, I'll just check on those when we start doing stocks. I'll be looking into these, you know. Yeah, look, all I can say here is, look, you know, it's pointing upwards, and you can go with that, you know. So whatever constituents are there, and the biggest thing here is this here being in 3 waves and not 5 waves. This is the important bit here. I mean, obviously everything's important, but this is basically confirmed that this is not 5 waves from here to here, you know. So that's the gift of Elliott or Dow theory perhaps as well. So yeah, so now we need to look at crude oil. So with crude oil, we'll have a look at, we looked at the bigger picture yesterday or the day before or something, but we'll look at it again. First of all, from this particular low here, we're looking at this as wave 1 and 2 here. We could count 5 waves up here, so we decided to go long at this point. Our target is the $80. This is a CFD product, so this is where we need to exit. So we didn't want to exit on the 8. We wanted to exit just below that. So this trade now is finished. Okay, so that's that. Now, in terms of the structure here, we've got wave 1 and 2 and 3 and 4, and then we're going up for 5 here, which is 1 and 2, and then there'll be 3 and 4 here, and then 5 at this point. Once that 5th wave comes in, then we could move down from here. That's possible. We'll talk about that in a moment. There's 2 things that could occur here. One of them is that we pull back quite deeply into the 50-60%. The other one is that we pull back as another wave 4 here, and then we have another high to come in here, and then we have another correction in here. So I'll explain that in a moment. So it'll be interesting to see if this top here can stay quite close to the $80 mark here, 810 or something like that. And then we're just going to watch it to see if it comes, how deeply it comes down here and what it is, because I was expecting it to, I'll take it roughly to the 10 here, and so that will be the 38.2%. So I think that we could come back to this little area here and then have another high here. If I can identify this here being this being corrective here, then we'll look to trade this up here as a short trade. We'll just trade the third wave. We won't trade wave 1, we'll just trade wave 3 and then we'll get out. But once we once this here is finished, then we'll just need to wait. We just need, basically we're looking for a classic trading levels pattern on the $8. This is what we're looking for. So this arrival here this is where we're getting out at the moment. Now it could go to 10, go up a little bit, then we're going to have a correction and then another move up, and we'll trade the third wave up here. And then this particular move down through here, we need to see if it is corrective, and if it is, then we can go long over here. So I'm just going to sort of explain a few things now. So basically this this particular low that we've got here, let me just clean a few things up. I looked at this as an A, B, C for the A wave here. And then I looked at this as an A, B, C, D, and E over here for the B wave. And then we're looking for the C wave to go up here. Okay, as an A, B, C pattern up here. We know 8's a profit-taking number. We've seen it, you know, hit before. Now, this particular trend that's going up here, I counted it in the most conservative way, as I always do. Always start with the less. So we've gone up as 1, 2, 3, 4, 5, and we've done our job and everything is cool. Now, the next step is that, well, we could change this here. So we could change this here with just 5 waves for the A wave here, and then fit a triangle in here. So all of this would move across one move over here for this, right? And still have the B wave here. And then we would change this wave 1 and put it here, and this wave 2 would go to here, and then this top here, this wave 5 would go over to here, this wave 3 would go to here, and this wave 4 would go to here. So we actually get another high coming into play. So that would be that. Then we've got to kind of figure out, are we going to go any higher than this? You know, first of all, we've got to identify if this is going to be a corrective move in here. That's step 1. If that's the case, then we'll get this, and then we could get a bigger correction here with the classic trading levels as the top here. Then we've got to figure out, can it move up here further? So we know fundamentally with all the plays in the game that we're going to, you know, you got US by restocking their supply up at these sorts of prices. So that's the floor in the market. Because of green energy and other things, it should stay under 100 here, and then anything besides this will be manipulated. You know, OPEC, you know, they want to make as much money as they can out of it, all the rest of it. So everybody's pulling strings, and I don't even pretend to understand it all. I mean, I've listened to professional people in the industry talk about it, and they're talking about this range here, which kind of helps me a little bit, because if I go from, I think we were looking at this, I'll just go to 20,000 ticks. Might need to go to, I can't remember what charts I've updated, so you have to forgive me here a bit. So we can look at this here as, you can count this in different ways, to be quite honest about it. So, but anyway, this whole move down here may be the end of it, and this wave 1 here could be wave 2 over here. But I don't think that's the case, and I think that it's all about, this number here is basically what it's all about, you know, at this point. So I'm thinking that what can happen here is that this little move up through here, right? It's basically changing trend at the moment, isn't it? So we've got, you know, we traded this little bit in here, and we're thinking that it could come to here and then do that, and then give us that little classic trading levels pattern here. Now, from this point, that would be looking at this as wave 1 and 2 here, and going up for 3, 4, 5 here. So at this point, it's still a long way from having any sort of rally here, and I think that we are in some sort of rally here. You know, that's what I think. You know, so if I do this and then I put this over here, the 50-60% retracement level, this is where we could go to, because a trend has got a beginning, and then it's got the middle, and then it's got the ending process. And I feel like we're at the end of this. Now, it is possible that we could just, continue to go up here and it's just a crazy world. But I think that we're going to be in this, I think we're going to be in a band like this for quite some time. And this would be the, I'll just reignite it in another way, an A wave here, a B wave here, and a C wave over here for this. So what we've got to do is that the next long trade that we've got to do is just figure out on the intraday basis what's basically cooking here. Even whichever way you want to look at this here, right? Whichever way you want to look at it, it's still a triangle pattern. Now, it could be a bigger one or it could be a smaller one. There's different ways to view this, because if the triangle ends here, we've got 5 waves up here, and then we've got 3 waves back here. These 5 waves overlap to 1 and 4 here. So there's different ways to view all of this, and that's why we'd be looking at this as 1 and 2 here and 3 to here. So, yeah, what I was going to say is that whichever way you want to look at this here, it's a corrective pattern, so it's basically some sort of A wave, if you will, some sort of B wave, and some sort of C wave up here. That's what I'm thinking, to make some sort of larger A wave up here, and then a B wave here. I know it's a bit complicated, but it's kind of the best fit that I see at this point. If anybody can add to this, that would be great. So I'm thinking something like this, So we've made money in here. The next trick out of the rabbit out of the hat is not to lose money in all of this, and is to be patient here. You can see what it did here, how it vibrated here and popped up and dropped, and all of these consolidations here. We'll get something like that, and what we want to see is it, after that, we want to see it sort of move up. We want a high to go off, or, if this top got taken out here after this, we would have gone long from that point. And I remember all of that in here. We didn't get trapped there either. So we kind of, that's why we get paid the big bucks, because we're professionals. That's very funny. Yeah, so that's where that is. So I'm thinking that we've got, I think we could, I don't know for sure, I've got to prove it, and the only way I can prove it is by getting a corrective pattern in here. If we get a corrective pattern in here, then once this becomes support on top of the 80 here, it's going to run quite nicely up here. And the idea is to build in through 81, 82, and 83, and 85 in here, and build in strongly at that point. Alrighty, sorry to waffle on so long about that, but I finally spat it out. Over to the natural gas, and as I mentioned last time here, we've got commodities here, yeah, natural gas here. It was you can see here with the futures market here, the NYMEX here, you can see these big volume spikes here. So you can see there's quite a lot of volume coming into all of this, so that's fantastic. And we've identified this particular move coming back here as corrective. And we're trying to identify this as being impulsive to the upside here, because, yeah, if that's the case, we're going to be going up further. So coming back over to here, I'm thinking that, first of all, there's different ways to count this. We can have wave C down here or wave 3. If it's wave 3, we come all the way up here to 38.2% of wave C or 4. So one step at a time. Now, yeah, so we traded in this leg, we've waited in this leg, and now we're long in here. We need to identify 5 waves moving up here. If we can identify an impulse wave here, then we're going to get 1, 2, 3, 4, 5. Now, don't worry about the targets up here and all that. We'll get to all of that. It's going to be tricky getting through that. There's pit stops all the way along. So I'm just going to go from 50,000 ticks to 100 ticks in here. There we go. So then we're just going to get a bit more Sorry, I was just falling in love with 72 again. Never really fell out of love with that number, but there we go. So we need more data here. Okay, so let's just... I better get some more data in here, I guess, just to get our bearings. So, so don't worry about too much here. Basically what could have happened here is that the whole thing could have ended here. The whole correction ended here. We could have come further down here. But we noted that we had overlapping wave structures in here. We didn't know if that was a big deal or a small deal at this point. So we could go 1, 2, 3, 4, 5 here, but we got that strong overlap there. So kind of better as an ABC pattern here. And hopefully it is corrective, you know, because if it is corrective, then we'll be making a new high above here. So I understand that in some of these, you know, low traded markets that you can get sort of weird shapes and overlaps and bits and bobs, you know, but anyway, it's just noted as that. So what I was going to do was to see if we could get 5 waves over here. Now currently we had 5 waves here. So 1, 2, 3, 4, 5 for 1 and 2. And then we got another 5 up here, which we could identify. We had a little long trade here. And then it makes a nice 3rd wave here. And this makes a nice 4th wave because it's ugly and a beautiful ugliness. And then even this move up here is not, I think this is like 1, 2, that looks like wave 1 and 2 here. I don't know if that's another 1 and 2, another 1 and 2. We're going to go even further up here. And this is another problem too that we may get to, is that maybe we might need to put wave 1 over here and then this wave 1 over here. So we've got 1 and 2 and 1 and 2 here. You know, I don't know if that's the case, but the way that that's building here is telling me that, look, we're going to be going a fair way up here. So we're going to take profit at this. This is just a half a position here. I think what we'll do is we won't take profit here. We'll just get rid of that, delete that. This is only a part position anyway. So what we'll do is we'll put it just here as a stop, and that will keep us in. We'll make less money, but the idea wasn't really, I mean, the idea is to make money, of course, but the idea of building in here was to build a stronger position. So if this is 1 and 2 and 1 and 2 to the upside, then we've done all the right things. And we'll just have a look at how this floats a little bit. So yeah, so this could be, there are definitely 5 waves in this move. And the thing is now, if I just take that top there, or splitting hairs, well, there we go. So that top has been taken out. So that gives us 5 waves to the upside, 1, 2, 3, 4, 5. So that means that this here is now confirming that this is corrective and that we will be going higher here. So it does appear that we will be moving higher here. The next caveat really in all of this is that even though we're going higher, we can end up coming lower again here. So if we take this low, and I'll just take that high there, just in case this is in case that is a top here. Do you know what I mean? We don't know that. That could be down for 1 and back for 2. We don't know that. But what I wanted to do here was just, where are we here? That's the 50, 60. So at worst, this market can come back down into this space. That's the worst. That's what could happen. It could, you know, the worst situation is that it could come to here and then go up. But if the dollar, if I've got the US dollar right, and that's going to go down, well, then things are going to be revalued a little bit, and this will just continue to push up from that point. I would like to go long here again, but I don't want to go long here and get trapped here and then get this, you know what I mean? So I'll just have to be patient here, and we'll have to capture it over on the ABC side of the world here. And it probably won't come all the way down to here at that point because there's so much support in this consolidation area here. But still got to show the worst and hope for the best. So anyway, gas is looking very nice, actually, you know, that's good. So really the whole thing now is really about the US dollar. It's going to dictate what's going to happen to not everything, but certainly gold as such. So we still got to find a top in here. You know, we do have a little 5 waves down from the top here now in this little move here, so that's something. Let's just see how that sort of develops, if it's going to push up further. And if it goes through that red line, which is the beginning of wave 1 here, then we have to rule out wave 4, and then we'll have to look at wave 2. So yeah, we've been in these situations before. We just got to patiently wait to see if it is a top or isn't a top. You know, there's not a lot to go on at the moment. I can see that the trend has got a beginning, a middle, and end going from the, you know, from the beginning here. You know, it's got the building process in here, and then everybody sees it and stretches out at that point, and they're all in at that point. And when everybody's in, there's no one else to get in, and it starts creeping at that point and starts flicking out stops, and you know, the panic comes in. So is that what we're seeing here? Maybe, you know, we need to see a little bit more evidence on that. Alrighty, sorry to bore you to death, but that's the commodities.